Hi everyone, it's Gerry from the DeFi Alpha Gaming Guild here with some videos on blockchain basics. In this series I want to go through some of the fundamentals about blockchain technologies, Web3, why they're important and what you need to know about them. Blockchain is a pretty difficult thing to get your head around, and I found it, even myself, quite intimidating when I started. But once you get into it, you start to understand why it's around and why it's important and why it's not going anywhere. So what I wanted to start off with was this quick excerpt from the Inside Job documentary that came out in 2010 about the global financial crisis and the Great Recession.
Share prices continued to tumble.
Lehman Brothers was forced to declare itself bankrupt.
The largest single point drop.
The regulators, they had the power to do every case that I made when I was state attorney general. They just didn't want to.
We are watching this tsunami coming.
They were having massive private gains at public loss. The financial engineer built dreams. When those dreams turn out to be nightmares, other people pay for it.
Bear Stearns, Goldman Sachs, Lehman Brothers, they knew what was happening.
What do you think about selling securities which your own people think are crap? Does that bother you?
As a hypothetical?
No, this is real.
Okay, so basically, the Great Recession in 2008, 2009 was built upon mountains and mountains of debt and very poor financial regulation. And out of that came Bitcoin. So Bitcoin started about here, the start of 2009, and it was created by a pseudonymous creator. Might have been one person, could have been a group of people, nobody actually knows. They were called Satoshi Nakamoto. And in the very first Bitcoin block, which started the genesis of the chain, there was a hidden message relating to the front page of the Times newspaper on the 3rd of January 2009. Chancellor on the brink of second bailout for banks. So clearly they were alluding to the issues revolving around our financial system, and that is partly what inspired Bitcoin. So Bitcoin, it's a peer-to-peer money system that's been designed to disintermediate the banks, which basically means you don't need to rely on them, those third parties, to make financial transactions. And again, it's done in a peer-to-peer decentralized way. So because of that, it can't be censored by government. It can't be stopped by government unless you kill the world's internet, which in this day and age is simply not going to happen unless there's some sort of, astronomical event that, we're not going to worry about our financial system in that scenario. Also, in relation to that, I wanted to bring up the money supply. If we have a look at this chart, does that look like a bubble to you? Because people say Bitcoin is a bubble, but that sure looks like a bubble to me. We've basically doubled all the money in existence in 8 years. And you wonder why we're now starting to get inflation that looks like this. 7.5% inflation, guys. So that means if you get 2% pay increase each year, you're down 5.5% in real terms. So this is what happens when you debase a monetary system. We have a look at the world debt clock. Look at these figures. That's $30 trillion of debt. So this is why I don't think there's much that the Federal Reserve can do to increase interest rates, because the US, they have more debt than anybody. And these guys are the world's reserve currency that we're all pegged to. And if you go down the list here, you see all these other countries, they're no different. They're all the same. We're all debasing our currency systems, and it's a race to the bottom. That's why Bitcoin was created, to be an alternative money source. Now, it has its own pitfalls. I'm not going to evangelize about Bitcoin. I'm just explaining why it's in existence, and I'll let you guys make your own decisions. But that's part of it. So on this meme of all the money printing, we've got this Jerome Powell, the chairman of the Federal Reserve. This is the money printer goes brr. anyway, you get the idea. So this is what happens when, with basically all fiat currency systems, they basically don't last throughout history. Normally they last between 30 and 50 years. And we've been unbacked from gold since 1971 and the Nixon shock. So this is coming to its natural conclusion. And, you know, I worry about the future in terms of how this all plays out. Things are getting far more volatile. Our whole system is based on debt, and it's based on debt that cannot be repaid, literally cannot be repaid. There is not enough dollars in the world compared to the debt. So that's a big issue. So that's one side of things. That's why some cryptocurrencies exist. Now, if you're new to crypto, it's kind of a poor term for a lot of it. Most of them aren't currencies or even trying to be currencies. Some of them are, like Bitcoin, and Bitcoin's the most popular, most successful in that regard. It's not really used to transact. People aren't paying for coffee with Bitcoin, not many. You can, but not really. Most people are using it as a store of value, as an alternative to gold, digital gold. If we have a look at the world's largest assets, there's gold. It's the big one, 11 trillion. Bitcoin's down here, number 9, just under $1 trillion. So there's an awful lot of growth potentially still to come for Bitcoin if it's to replace gold or be a facsimile to gold over time. And the fact that it's digital makes a lot of sense. You can actually use it to transfer freely through the Bitcoin network and, you know, get around the banking system if needed, which lots of people do for remittances and that type of thing. People that are working or in countries that have really poor inflation with their currency, like Argentina, Venezuela. You know, those guys are getting their currencies debased by 50% a year or more. So it's a race into an asset, usually US dollars, but a lot of them are also using Bitcoin for that purpose. The other side of crypto is more decentralization itself for things like what we're calling Web3 now. So rebuilding the internet so we don't have these massive conglomerates that can perform badly, with bad faith to their users. Because at the moment, you know, Apple and Google, Amazon, they hold so much of the wealth. They're almost like nation states in themselves. And they can get away with some pretty nasty stuff when they want to. I'm sure you're all familiar with the Cambridge Analytica scandal from the 2016 elections and what Facebook got up to there. They got fined. There's a whole bunch of stuff here that you can read yourself of them not behaving well and in good faith. And they basically own all of our data. So having decentralized networks as an alternative means that users can start to own the network and their data and have control over it. There's instances here like Facebook suspending thousands of apps and literally just killing off competition and businesses in, the stroke of a pen, basically. Other examples of things that happened in the current financial system where people are behaving badly. So we had the Gamestop scandal last year where the popular investing app Robinhood basically started censoring their users and stopping them from buying stocks. They were citing market volatility as the reason why, but the real reason was that the Wall Street hedge funds were on the other side of that trade and were losing billions of dollars. Here's another article on it here. The gains are rooted in disdain for existing financial institutions tapping into the same emotions as the Occupy Wall Street protests from a decade ago. So basically a bunch of kids on Reddit started using the Robinhood app to pump up the GameStop stock. The institutions were shorting it, basically betting it would go down, and they had to capitulate and they lost a lot of money until the powers stepped in and said, stop this from happening. Now, if you think this is all conspiracy theory stuff, you've got this Plunge protection team. This is a real thing. Most people don't realize this sort of thing goes on. So after the stock market crash in 1987, this was created. The whole idea is it's supposed to add stability to financial markets. And a lot of people that are passively in these markets through their super funds and their retirement plans probably think that's a good idea, but they don't realize that the whole system is just rigged and it's pretty much the biggest Ponzi scheme on earth. It's pretty well got the support of all of the governments. So as you can see here, they don't just advise, but they actively intervene to prop up stock prices, colluding with the banks to rig the market. Now, that's fine if you own stocks, and the top 1% own 80% of the stock market, I believe, something crazy like that. It's super skewed into the wealthy, and that's why this Occupy Wall Street thing exists. The Federal Reserve, these guys are on the board. So the chair of the Securities Exchange, and then you've got the chair of the Board of Governors of the Federal Reserve, are part of this Plunge protection team. That's this guy again. Anyway, you get the point. Print more money, give it to the banks, let the banks pump up Apple stock. They'll buy back the Apple shares, and the bankers just get richer and richer. It's the same guys that got bailed out, 10, 12 years ago with the last collapse of the financial system. And again, have a look at that chart. Does that look good to you? Doesn't to me. That's where our 7.5% inflation is coming from. So the other aspect of decentralization, Ethereum, if we go back to our assets here, it's the second largest cryptocurrency. It's not really a currency at all. It's more like a decentralized app store that applications can use and run on in a permissionless way. So it's the 29th biggest asset at the moment. Now, at its recent peak, it did actually flip JP Morgan, and so it was bigger than any bank in the world for a period of time there. There's been a bit of a pullback because, as you know, crypto is quite volatile. But the point is, people think crypto is not a real thing. It's not legitimate. Well, it's bigger than some of your staple companies that you think are legit and don't have any issues. I mean, Bitcoin is bigger than Facebook at the moment. So it's not going anywhere, guys. This is real, and it pays to actually understand how and why this works. So the founder of Ethereum, if we go back down here, Ethereum number 29, the founder, Vitalik Buterin, part of the reasons why he started to create it is, as I think a 15-year-old, he lost his beloved World of Warcraft item when the company took it off him just because they could. So he says he created Ethereum after his beloved World of Warcraft character was hobbled by the developers, awakening him to the horrors of centralized services. So this is why these things exist. It's to create a fairer system so we can start to have ownership and own our own data. And that's why blockchain is a thing. I really wanted to start off the first video on the why rather than the what. Not so much what Bitcoin is, what Ethereum is, more the why. Why does it exist? Why is it even a thing? What are the problems it's trying to solve? And by and large, it's these problems here and these issues here, where you have people and companies that are too big to fail and they get away with murder, to be honest. And mostly they have political power and political sway, and that's why they can do what they do. The last thing I wanted to mention is this video here. I'm not going to play it for you, but it's a really good and quite funny video to watch. It's done in a really good way with lots of good analogies. What actually is money and currency? It's only, I think, 6 or 7 minutes long. Yep. On the To The Point channel. I'll link it in the description. I think it's well worth watching as well. Next up, we'll probably get into a bit more of the specifics of what blockchains are, what different types of ones exist, and how they work, the mechanisms behind them. But this one was more the why. Why do we have blockchains? Anyway, guys, I hope that was useful. Thanks very much for watching.